June 12th. Public. Awesome. All right, we are ready for our global macro. Gotta retype that real quick. And it looks like we're ready to go. Cool. All right. So let's get a recorder. And we're discussing risk on, risk off, what we're looking at, what the sentiment is, and basically the overview of our idea total. All right, welcome to our global macro update, traders. Hopefully you guys all had a great week. I did. But let's get right into it. The big question of the day is, are we entering in a risk off scenario? Because of the stock market dump that we had yesterday, are we going to be looking at more safe havens in terms of currency, in terms of metals, and going to be looking to short equities and crypto? Or are we still on the risk on, in which crypto will be doing well, equities will be doing well? We don't want to be looking at safe havens like gold, silver. We don't want to be looking at longing currencies like the dollar, Swiss franc, Japanese yen. We're looking at Australian dollar, New Zealand dollar, GBP, all that stuff. So that's the big question for today. So let's first start off just looking at the equities, because this is going to be a major player. Let's just first look at the S&P. We did get a bounce here from this morning and overnight, but when the market did open, we got a pretty big move to the downside here. Lots of sell pressure, although we are still holding that 29.90-ish area as a previous level of resistance, which is now going to be a new level of support. So we currently see that huge dump, but we are holding at this level. So at this point right now, I'd still say that buyers are still coming in, buying up this asset, and we don't really have a risk off situation yet. If we do pass this zone, this 29.95-ish level, we do see a pretty big gap until the next major level of support. But at the end of the day, this is, in my opinion, going to be the last level of confidence for the buyers. And we can see this as well within the Russell 2000. Very similar chart. We got our key level of support, which was a previous level of resistance at around 1360. Huge jump to the downside, big rally back up. The candle that was green was less significant than the sell pressure, so we're not really seeing any bullish engulfings or anything that would indicate that there's strong buy pressure. Don't really see any wicks to the downside either, so this is just, in my opinion, a halt from the sellers and a hesitation from the sellers to push the price down. So I think that the main thing that we're going to be looking for is the SPX to see if we are going to get another down leg. In terms of the overall equities around the globe, let's look at the VT. We got a massive gap down and a huge bearish day yesterday, and we're getting an inside day today. We are still closing red, which means that the sellers won the battle for today. If it does close here in around 3 hours, but at the end of the day, we haven't made a lower low, and this could just be a consolidation. I think the main thing we're going to be looking at is the SPX in order to see if we're going to break this key level of support or not. So that's going to be the main thing I'm going to be looking at in terms of the equities market. The VIX is also important to understand the level of the volatility. That just went over my head, but it measures volatility, and if you see it increase substantially, it means there's an increase in volatility in the overall stock market, which is not very good. Usually you get increased volatility to the downside compared to the upside. There's not many situations that have occurred in which the VIX and volatility increases when the prices of assets are going up. Usually volatility is increased when the prices of assets are going down, and we see that big pump there from around $24 to $34, around 38% in the VIX. So we are seeing the increase in volatility, so you got to be in a position where we can act quickly if there is a shock like we had back in March, because the outcome, if we have a risk off situation, in my opinion, is that equities will fall, crypto will fall, you'll see a rush to bonds, so the yields will drop, and then you're looking to get basically, I'm mainly using the FX market in order to capitalize on that huge rush to safe haven currencies like the US dollar, Swiss franc, Japanese yen, and then I'll be looking to short currencies like the Canadian dollar, Australian dollar, New Zealand dollar. So these are, or even you can even look at exotics. You could look at the ZAR, which is South African rand. You could look at the Turkish lira. These are some of the more exotic speculative currencies. You do have to consider carry costs, positive or negative carry, because that does play a role in your trading if you are in the FX markets. So that's going to be the equities. So let's just quickly look at the bonds. So the right-hand side is going to be looking at the 10-year and 20-year bond yields. When the yields of bonds go down, it means there's more demand. People are buying bonds, so there's less of a yield. And if it does go below this confluence zone around 0.7 for the 10-year and around 1.4 for the 30-year, in terms of the yields, I think it's going to have another move to the downside, which is going to be a risk-off move. In general, people flood to bonds when things get risky, even if they're yielding like not even 1%. It's where people go. The United States Federal Reserve is what in many people see as the safest bond that you can purchase. So that's where people go to if they have billions of dollars that they need to keep preserved due to other equities and investment tools actually depreciating quite substantially. Another thing we're going to be looking at is oil, both WTI and Brent. If oil is going down, that is normally considered a risk-off sentiment move. When oil is going up, it's risk-on. There's higher economic activity requiring oil, which is a commodity, which is good. And when oil is going down, breaking supports, holding resistances, you're most likely going to see a risk-off type situation. And you see negative correlations between gold and oil, and we'll get into positive and negative correlations looking at a 180-day correlation chart at the end of the video, but we're just going to get into the price action of some of these different assets. So that's my take on oil. We are seeing a move to the downside, which is a little bit a risk-off sentiment, and we are seeing a move down in the yields for US bonds, which is a risk-off sentiment. One thing that is keeping me from just fully saying this is a risk-off move is the fact that the equities are still holding our key level of support that we already talked about. But if that breaks down, I think that oil is going to go and fall below key levels of support at around $34, 36 on Brent, 34 on WTI, which is Western Texas Intermediate. And then if we do get that equity move to the downside, I think that bond yields will fall as well, which is then just confirming our overall risk-off sentiment that we are trying to find, create, analyze, whatever you want to call it. Silver has not been doing much, but gold has been doing a little bit better. We are holding that previous resistance at around 1750 as a new level of support. Could draw a descending trend line connecting the lower highs, but at this point in time, there's not really much to do with silver because of the gold and silver ratio moving to the upside, which is favoring a potential long for gold compared to silver. Silver had a huge move when this was going down, but we're holding the previous resistance of this ascending wedge resistance as a new level of support. And we are making a move to the upside with a huge bullish engulfing candle confirming the buyers in gold. So oil's going down, gold's going up. That's definitely a risk-off type of environment. And this is gold right here. We held that previous low really, really well, and we made a slight move to the upside. We got a key level of resistance at 1745. Once that breaks, I do think that we will get a breakout because we've been holding this horizontal consolidation sideways for a while. We're not really seeing a strong move to the upside yet, but if we do break this 1745 zone, I think we do have a strong chance of making substantial higher highs and higher lows. Also, something to note, we got our anchor point, we got 1, 2, and then we got a third touch point, and that previous resistance is now going to act as a new level of support. And this is in confluence with our horizontal zone that we did indicate as a previous level of resistance and support. So key level of confluence both horizontally and with the descending zone now acting as a new support. So gold does look bullish, oil does look more bearish, and that is more in favor of the risk-off sentiment. So that's going to be my view of gold and silver and the metals. And now what we're going to talk about, let's just move this up here and discuss what two baskets that we're looking in. So we got risk on. So let's just type this on. So this is risk on pool, and this is risk off. Oops. That's risk off. So we got two pools. What is going to be on the risk on? Stocks, right? Overall, if you're longing stocks, that's a really poor C. Stocks, that is overall a risk on sentiment. So you're looking at S&P, you're looking at Dow Jones, you're looking at the Russell 2000, you're looking at overall global stocks. If they're going up, that is a risk on sentiment. What's another thing that would be in a risk on sentiment? I would say crypto is in this bundle as well. There's a high positive correlation between Bitcoin and Russell 2000 and the S&P. So we do have to put that in the same category. What else is a risk on thing? I would say oil. So let's just do that. Oil is also a risk on sentiment indicator. And what's another one? Let's go and say stuff like FX markets, like we see AUD. We also see CAD. New Zealand dollars, very highly correlated with AUD, CAD, GBP, BP. And, stuff like TRY, which is Turkish lira. You got the ZAR, which is more speculative. Like these two are extremely speculative compared to these. But overall, that is your risk on sentiment assets that you're looking for. And you're looking to short these pairs or these currencies with stuff like USD, JPY, Euro, and CHF, which can't really see that, but CHF is another one there. What else is a risk off? Gold, definitely risk off thing that we're going to be looking at, right? So these are going to be, in my opinion, the main things that I'd like to be looking for longs if it was a risk off sentiment. So I want to be, let's say we're in a risk off sentiment, I want to be long US dollar, JPY, Euro, or Swiss franc, or potentially gold, and I want to be potentially short AUD, CAD, GBP, TRY, which is Turkish lira, ZAR, which is the South African rand, potentially oil, potentially crypto, potentially stocks. So that's how I'm viewing it. That's why we need to understand where in the risk on, risk off sentiment we are. If we're heavy on the risk off, that means that things like stocks, crypto, oil, and these currencies are going to be dropping. You're going to want to short those. Whereas if you're on a risk on sentiment, gold's going to be going down. You want to be looking to short USD, JPY, Euro, CHF, and that's what we've seen recently. So that's how I'm viewing the market. That's why, in my opinion, it's really important to know where are we in the sentiment in terms of global investors, because that's going to be really determining where we're going to be looking in terms of potential investments, potential trades, all that stuff. So that's basically the video of the day. Really, really quick. Went over it pretty quickly, but not a whole lot to go over because we are swing trading. I am pretty active in the FX markets, but at this point in time, it does look like we are shifting into a risk-off sentiment due to the equities dropping, due to the fact that we could be seeing another sell-off. This could be a little bit bounce. But like I said at the start of the video, the main thing that we're going to see break in order for the confidence of the bulls to diminish and the confidence of the risk on investors to decrease would be, in my opinion, a break in a major support level within the equities market. That, in my opinion, is going to be the complete trigger for the risk on sentiment that could come into fruition if we do get some more selling within the equities markets. So that's going to be the overall video for today. Thank you very much. We will go over the questions at the end of the video, but that is going to be the completion of our recording. So we really hope you enjoyed it. It was a little bit quicker. Really went over the quick, fast, dirty explanation of what we're looking at, why we're looking at it. And now that's complete, we're actually going to look at correlations, negative correlations, and seeing what it all means. So we have this nice matrix, table, whatever you want to call it, index of 180-day correlation. So obviously, the shorter time frame it is, the less dependable the correlations are. One meaning 100% positively correlated. So if you're looking at, for example, the Dow Jones Industrial Average, it is highly correlated with the S&P 500. That makes sense. It's also highly correlated with things like the Russell 2000, which is small caps, and the Nikkei 225, which is the Japanese stock market index. So when we're looking at 180-day correlation, we have a good understanding of what assets are negatively correlated and positively correlated, and somewhere in the middle. So going back to risk on, risk off assets, let's look at the US dollar, or Swiss franc. So we see a lot of these risk off investments are right here. So the 10-year T-notes, this is the US bonds. Let's see what they're highly correlated with and negatively correlated with. So first things first, we see negative 80, negative 71. These are extreme negative correlations, meaning that if the 10-year T-notes go down, there's a high probability that the Dow Jones, S&P, NASDAQ, and Russell 2000, all of those are going to be going up. And we have an extremely high correlation with 30-year T-bonds, which totally makes sense. And you got euro dollars. And then you see extreme negative correlation, like we saw within the stock market, in things like crude oil, Brent crude oil. This is diesel. We got stuff like gasoline. And we even have stuff like corn, soybeans, cotton, live cattle, lean hogs. So we're seeing already a good landscape in which we have an understanding, which is risk on type of investments and risk off type of investments. Let's look at another one. We know that the Japanese yen overall is a risk off sentiment investment. When investors are worried, they go to the Japanese yen. When there's a lot of speculation, a lot of hype, a lot of opportunists looking at high ROI investments in the market, you're not really going to see people dive into Japanese yen. So we do see Japanese yen is less correlated with the overall market. We see that there's some negative correlations within the equities market. We see some positive correlations within stuff that is more risk off, like the Swiss franc, like the bonds, and then you're not really seeing a whole lot of correlation here. So let's look at another thing. Australian dollar. This is an extremely positive risk on investment or currency. So let's just zoom that in right now. Oops, did not do that right. So this is the ADU. Let's go like this. And we can see the Australian dollar extremely correlated with stuff like Dow Jones, with the Japanese stock market, with Canadian dollar, with platinum, silver, copper, crude, Brent crude oil, gasoline, diesel, stuff like that. And that is a highly correlated asset. So it's good to know. And then you see stuff like this, and then you see the 30-year bonds, 10-year bonds, euro dollars, all extremely negative correlated with crude oil, Brent crude oil, diesel, gasoline. So if you don't know how the overall market works in a risk on, risk off sentiment, definitely this is a really good way to gauge what investments are used in a risk off sentiment and what investments are used in a risk on sentiment. So hopefully that gives you somewhat of an idea of what I'm looking for, how I analyze the overall sentiment if we're on a risk off or risk on. So that's the overall video. Hopefully you enjoyed it. I will close this off and answer any questions, but in terms of the recording, I'm going to end it there. So thank you very much for watching, everyone. Hopefully you had a good rest of the week, or hopefully you had a good week, and hopefully your weekend is going to go fantastic. So thank you very much for watching. We really hope that you enjoyed it. You got some education, entertainment, something in the middle of it. That is our goal. If you did find this useful, it'd be great if you would subscribe to our channel. Thank you very much, and hopefully we will see you within the next video. Bye for now, and happy trading. All right, so that's going to be the video of the day. Let's go over some questions here within the TikTok while we have the YouTube live and TikTok live going. All right. A lot of people joined, but no real questions. Mohammed said hello. How's it going? Mohammed did talk about gold. We did talk about gold a little bit. Right now, I think we're in a phase where we're switching from a risk on environment to a risk off. Gold has been consolidating for a while here within the range around 1745 to 1685. And in my opinion, the breakout point would be 1745. We do see a nice descending, expanding price action formation that could possibly create a move to the upside. We got a massive bullish engulfing candle push the price well above the key structural resistance that we were looking for, and now the price has held that previous resistance for a new level of support. That, in my opinion, is pretty bullish for gold, but I would like to see the S&P drop below our key level of support before I really start to look at gold. Overall, in terms of longer time frame, yeah, I am very bullish on gold due to currency proliferation from all central banks, not just the United States dollar. I think that's extremely bullish for gold, and the uncertainty within the global environment with COVID, with oil collapsing, with the social unrest due to riots. I think that gold could be a really good trade in terms of the potential next move after this consolidation phase is done. So I'd say it's still a little bit too early. It did break a key level of supply, which is great to see, but I think the momentum will really start to kick in once we break 1743, and if the overall equities market starts to move to the downside, breaking some key level of supports. The momentum is just starting, in my opinion, for the potential next move to the downside, and gold could have that same thing where we get that massive liquidation event. We don't exactly know, but in terms of more of the macro perspective, I'm definitely bullish on gold. What about crypto? I would say look at the previous crypto market update. We do global macro updates where we're looking at risk off, risk on environments, looking at a bunch of different assets, bonds, oil, gold, silver, FX, equities, and then we're primarily looking at BTC, Ethereum, overall crypto market, BTC dominance, Total 2, which is the crypto market cap, excluding BTC, only looking at alts. That's the stuff that we look at within the crypto market update. So we try to segregate the two, because if we're just bringing all the information at once, it might be a little bit overwhelming. So if you do want crypto information, we did provide a crypto market update yesterday that you can look at as well. All right. Thanks. Yeah, no problem. And also, we do provide timestamps within the description. So if you're, for example, looking at the previous crypto market update or today's, I will put timestamps on it at the end of the video when I upload it, so you can see where all the kind of subjects are. If we're looking at bonds, if we're looking at oil, if we're looking at FX, whatever it is, you'll have timestamps there. Euro or USD if you were European. Not exactly sure, like what would I hold? Well, in short, I would rather hold US dollars than euros. Euro went up after they printed a lot of them. I personally, that kind of does not make sense in terms of fundamentals. If you substantially increase the supply of a currency, normally you wouldn't see massive price appreciation of that currency. But we're kind of living in a backwards world right now. So the euro did increase, but in terms of what currency will be stronger, I do think that the US dollar will be stronger than the euro, primarily because the US dollar is the world reserve currency. Even if you're not a part of the United States, if you're transacting commodities, Brazil to Spain, or like Australia to Europe, or wherever, the world reserve currency, the currency in which almost all commodities are transacted, are in US dollars. Now this creates obviously a demand for US dollars, and also it creates debt in other countries, both the country in debt and businesses in debt, because you need to borrow dollars to transact on the global stage. There's a lot of people who are borrowing a lot of dollars. There's a need for dollars to be paid back, and there's a demand for dollars, and if the dollar goes up substantially, there's something called the dollar milkshake theory, which is basically a massive short squeeze on the dollar. This could happen. This is just a theory. We could see the dollar go down. Basically, I view the dollar in two ways. The high probability situation, in my view, is, yes, we're getting a weakening of the dollar right now, but if there is another liquidation event where assets across the globe do sell off, I think that people will rush back into the dollar. They didn't rush into the euro as much. They didn't rush into any other real currency. Everyone rushed into the dollar. So if this happens again, if we do get another sell-off, I think that people will rush into the dollar. So the better bet, if you're talking just euro versus dollar, I think that dollar would win in terms of a long. That's fundamental basis. Thank you very much. Yeah, no problem. So obviously that's just a theory, but in terms of global demand, dollars are, in my opinion, in more demand than euros. That's just through my understanding of the markets. Obviously, I'm not saying that's 100% true and it's going to happen, but just looking at previous historic moves. Let's just open up a brand new thing here and quickly look at euro dollar, because obviously that's going to be a comparison versus euro and dollar. Euro's winning right now. Euro's definitely taking the lead, but look what happened back in March. Massive, massive move when the sell-off started. Dollar did come back quite aggressively. And then we got some consolidation, so we got a massive sell-off. So when this chart goes down, US dollar is beating euros, right? But then if the chart goes up, euros is beating the dollar. So right now, dollar is significantly weaker than the euro. But we saw during March 10th to March 20th, during the worst of the stock market, everyone flooded to the dollar. It's the world reserve currency. People can transact on the global stage with this currency. They can't do it with almost any other currency. Who in the world would take like South African rand versus the United States dollar if you're not living in South Africa? Not many people. That's the power of having a world reserve currency that you can print unlimited amounts of. Federal Reserve has a ton of power in that regard. All right, so that's going to be, I believe, the end of the video, unless we have any other questions, which I don't really see. Do you announce anywhere when the next one would be? I'd like to attend each one of them. Yeah. So one place we do provide is right here. Oops. So we go on our general discussion. This is our Discord. So I posted one yesterday at around 4:50 p.m. Today was around 9:50 a.m. And we post here before we do our YouTube lives for our global macro update and crypto market update. So you can find, if you are on our Discord, that you will have a notification from me, Keith, that I will be starting our global macro update or crypto market update. So that's going to be how you can find it. So yeah, I don't really see much else on there. And let's just look at what else we have. Not much else. So that's going to be the end of the video. We'll see where it goes. Hopefully you have a good understanding of what we're looking at in terms of how to understand, gauge, analyze risk on or risk off sentiment. That was the majority of the focus of the video, and hopefully you did get something out of that. So hopefully you enjoyed it. Hopefully you have a great day. And until next time, have a good one, traders.